All right, Matt, we got to start off with the Mag 7. That's the kind of the big earnings this week. Got 4 of them. Do you have a top pick when it comes to the Mag 7, and give us the reason why?
Yeah, I mean, the common theme, it's a huge week. You said it, the common theme this week is tariffs, and you're going to hear about them nonstop. I mean, huge earnings week, and, Amazon's no different. So, this week, Friday, they report, and we're going to pay attention to, of course, potential tariff impacts and some of the color on this. But, they're looking at revenue, 8% growth over last year, and earnings jump of 40% earnings per share. But how much is sustainable? I mean, Amazon is at the heart of the tariff storm, no doubt. I mean, that they had a short-term surge in commerce, but we're looking to see if consumers are borrowing from some of that future demand because of tariffs. And, it kind of sets up for an uncertain second half of the year for them. But AWS, the cloud side, continues to grow and be a driving force. But they paused some of their data center expansions. $100 billion in CapEx is earmarked for this year, which is pretty hefty. But with their earnings report, we're looking for Jassie's tone on the consumer, future CapEx, and just really actual plans for handling tariffs. Short of it is the key is valuation. They're trading at 30 times forward. I mean, it's way below their 5-year average, so the stock's cheap.
All right. So, Matt, I just want to understand. So you're saying you would feel confident buying this stock ahead of earnings? Because there are a few landmines here potentially for this stock. The cloud business, there could be a slowdown. These companies are not necessarily impacted by tariffs, but they are impacted by growth. And then on the other side, the retail business. A lot of the items that you see on Amazon on their marketplace are subject to tariffs. So no concerns about those two areas?
No, not buying ahead of earnings, no. And yes, definite concerns ahead in those areas. It's they've got different parts of their business, but with the consumer, there's obvious concerns, and it's the tariff, it's the uncertainty around tariffs. We just don't know where it's going to go at this point. So not in a hurry to buy it. The stock is cheap. Going back to that, so.
All right. We were talking earlier in this show about some of the earnings this week, kind of talking about exposure to the consumer. McDonald's is reporting this week. Also, Booking Holdings, kind of a look at the travel trade. You're also looking at Starbucks. What's your take of Starbucks ahead of earnings?
Starbucks, the short of it is they're still in that turnaround plan stage. And it's, Nickel, we're looking for color on what he'll have to say about this and where they stand, kind of in the midst of the turnaround taking shape. But, they continue to invest in their long-term growth initiatives, which are improving speed and the customer experience. But, I mean, they're a true cyclical. They're not Tesla. They're not Amazon. They're not at the top of that sector. So, valuation has moved down recently. But we're just really, with Starbucks, we're looking to see where they stand on their turnaround plan with regards to what's going on with the consumer in general.
All right. We also have CocaCola reporting, ticker KO. We saw a bad week for staples last week. What's your take on Coca-Cola going forward?
It's regardless of last week, Coke, against just the broader market weakness so far this year, it's the top performing stock in the Dow, up 18% year to date. And, they do face some headwinds. There's no doubt. There's just shifting consumer preferences towards a healthier lifestyle, make America healthy again, GLP-1 weight loss drugs, but they've got some ongoing portfolio diversification, involving like Fairlife and things along those lines. But, I always talk dividends, Frank, where it's a dividend aristocrat, 2.8% yield. There's potential growth coming in the years, and they've got a strong international exposure, which also mitigates some of that geopolitical and uncertainty and regulatory risk. So just watching for signs of some of their sustained demand, cost management on tariffs and things along those lines.
All right. One last one I want to talk to you about is Caterpillar. Some management change there. Their CEO, Jim Ump, will be stepping down, longtime COO taking the reins. As you look at that company that faces a lot of, threat from tariffs and also the trade war, what are your thoughts about that going into earnings?
Yeah, great question. Joseph Creed's taken over, so there shouldn't be any disruption, should be, stable there. But with that, I think that they will remain cautiously optimistic with their guidance. It's global growth concerns, like you said, could soften demand. Obviously they're fully aware of that. Cyclical sectors like construction, mining, energy are all going to be affected. But we'll just pay close attention on how management plans to navigate just some of the uncertainty in that area.